Hello friends, in the series on the income tax cases, today we will discuss two very important issues. The first issue is that whether any expenditure which is incurred to acquire some right in an intangible asset is also a capital expenditure. And the second issue is that whatever the expense is incurred in the form of difference in the market value of the share and the value at which the shares are given to the employees of the company under the ESOP plan is a revenue expenditure or a capital expenditure. These both issues have been judged by the Madras High Court in the case of CIT versus Shriram City Union Finance Limited. This case has been reported in 460 ITR at page number 232. And the date of the judgment is 11th September 2023. In the present case, the assessee has paid royalty to a company for using the logo of that company or the trademark of that company for a limited period so that the sales of the assessee can increase by using that logo. The payment of royalty which has been done by the assessee was not a revenue expenditure according to the assessing officer. While the assessing officer was doing the assessment proceedings of the assessee, the learned assessing officer was of the opinion that the royalty has been paid to acquire some intangible asset, hence it is not a revenue expenditure and it is a capital expenditure. The second issue on which the learned assessing officer made the additions was that the assessee in the books has claimed the difference of the amount in the market price of the share and the price at which the shares were given to the employees under ESOP. Both these matters in the case of the assessee were covered by the decision of the Honorable High Court, but the department was carrying this matter, and when this issue was before the tribunal, on the first issue it was the point of the tribunal that the royalty has been paid to use the logo of the other company and the trademark of the other company for a limited period and for the limited purpose of increasing the sales, and hence it is directly related to the business of the assessee and it is for increasing the profitability of the business. There is nothing of any element of capital expenditure. No intangible asset has been acquired. Just a right in the intangible asset has been acquired, and that is for a limited period, and the assessee has not acquired a permanent right in the logo or the trademark. So in the present facts and circumstances, the payment of royalty for the use of the logo and the trademark cannot be termed as capital expenditure. On the second issue, the tribunal said that whatever the difference is there in the market price of the share and at the price at which the shares are given to the employees are treated as perquisite in the hands of the employees, and the TDS is deducted by the company. So the revenue is getting the income tax, whatever the difference is there in the hands of the employees. So in the present case, when the ESOP are given to the employees, this is given just to retain the employees for a longer period of time, just to increase the connectivity of the employees and the company, just to boost the loyalty of the employees towards the company. So it is in the very nature of business expenditure for running smoothly the business, so that the employees of the company can attach to the company for a longer period of time and the company can get the benefit of those things. So the tribunal, both in the matter of royalty payment and for the ESOP expenses, held that both are revenue expenditure and the assessee is very much entitled to claim those expenses. The department carried this matter to the High Court. High Court held that in the previous years also the High Court has given the decision in favor of the assessee. So both the issues are well settled and there is no infirmity or there is no error in the order of the tribunal. So the High Court upheld the order of the tribunal. At the end of this video, once again I am repeating the name of the case. The name of the case is Commissioner of Income Tax versus Shriram City Union Finance Limited, and this case has been reported in 460 ITR at page number 232. The matter has been decided by Honorable Madras High Court and the date of the judgment is 11th September 2023.